Hi, welcome to the Market Alert for Thursday, the 26th of August 2020. So, according to the news, the S&P hit 4,500 record high. Breadth flashes extreme fear and signals that the breadth of the market actually stinks as well. So that's according to the fear monitor for yesterday. But there's more interesting things going on actually than the market making new all-time highs, which I'll come to in a minute. But first of all, the implied volatility. As you can see, we've been dropping over the last few days. These are in descending order of the implied. And interesting, we still haven't got to the 1133 low yesterday. 1278. The lower this number goes, the bigger the correction will be, or potentially crash. The talk at the moment is that nobody can see any reason for the market to continue making the highs. Now we do have a 3.5 trillion potential printing on the table for infrastructure by the Dems. So we'll see what that does. But really, we're at the stage where, as Jim Grant has said in this article as well, that why is the Fed still in crisis mode when the economy is allegedly doing better? So well worth a read. This, by the way, I'm not going to paraphrase it or read it verbatim to you, but well worth a read. So look, just type in Jim Grant Fed is playing with fire, zero hedge into Google, and it will come up. But something more interesting and intriguing as well, and two things that happened yesterday. I received a text message from a relative to say, did you know that Marks and Spencer's are closing their bank and Tesco Bank, which got me thinking. So just let's have a look at this. So I typed in this morning, UK banks closing. And the branches will close between September and November. And I'm not going to go through the numbers here, but it's quite staggering, the number of branches that are going to be closing. And being the conspiracy theorist that everybody tells me that I am, really got me thinking, because way back I recorded a video about the Bail-in Act in 2011, 2013 for the building societies, where your money could be taken. There would be no more bailouts, apparently deemed illegal using taxpayers' money to save the banks. And then, of course, the follow-on from that is the constant and continuous, never-ending Q infinity, i.e. QE money that's been printed to infinity. It got me thinking, well, hang on a minute. If we're closing these branches, they're blaming COVID. I mean, COVID gets the blame for everything at the moment. But, they had restricted hours, which again makes you wonder whether it's engineered or not to stop people going to the banks because there's something coming down the line. And all of these branches all of a sudden being closed. Tesco Bank closing accounts November 21. And Marks and Spencer's all bank accounts to close 31st of August. So even the online ones. But the intriguing thing about the UK banks and the high street branches, as I said to my wife this morning, I said, well, I'll lob this one in. I don't give two hoots what people think. Generally, conspiracy theory seems to last about 6 months now before it comes to fruition anyway. But the closing of banks, of course, cast your mind back to BlackRock and other banks back in 2008 when people were queuing up outside to get their money out. And last week I actually covered this as well, where the Bank of England executing bail-in operational guide from the Bank of England. This was published recently, July, again 2021, all of these days. This is all relevant and new. This is, or current, I should say. And again in here it tells you how they intend to execute the bail-in if it's necessary. They wouldn't put this out if it wasn't going to happen. I can tell you that now. It's a bit like the COVID Act, where it was going to be temporary. Nothing is ever temporary. Nothing is ever repealed. Nothing is ever removed and put back. And this is what people don't understand. When the government gets a certain amount of power over you, they're never going to give it you back. That is a fact. You wouldn't have to look at the Terrorism Act and all the rest of the airport restrictions that are still there. They were all temporary. And the same with the COVID thing. So something big is coming down the line, which is going to make COVID look as if it never happened, frankly. And I've always said this. I recorded videos on this back to 2016 about reset. I was talking about a reset before reset became common parlance over the last year with the World Economic Forum. This has been on the cards for years because the financial system is nearing its end in its current state. We've already seen Rishi Sunak announcing the Bitcoin going to a digital currency, everything becoming centralized, and that's another thing as well. So not only will you not be able to get to the bank because the branch won't be there to get your money out if you wanted to, you will also find that the Bank of England will take over full control of all bank accounts, and you will be issued with not only a vaccination passport so that you are discriminated against if you can't have a vaccination, etc., but you'll find that you won't be able to spend the money where you wish to spend it. And not only that, but any more lockdowns and that sort of thing, then you will be monitored by the GPS of the device, whether you break the rules, and if you break the rules you will be fined, and if you're fined then the money will be taken automatically from your account. Seem far-fetched? Well, cast your mind back to January 2020. If I said to you that they would shut the whole global economy down and lock people down in their homes, which were still in those measures, by the way, then think again. It's not as far-fetched as it actually sounds. And here you can actually see it for yourself as well. It's not speculation. It's all going on behind the scenes as well. But the good news is, for those with anything below 85,000, that's calculated based on the valuation of the euro. The government actually back the currency. But I mean, you still have to question whether that would be the case or not as well. I mean, let's face it, let's just look at the farce and everything that they've created with COVID and dealt with it. So, don't hold your breath. Just because something is there doesn't mean to say it can't be changed by the government with one stroke of a pen, which Boris seemed to do quite in a cavalier way during the last 18 months, putting measures in place using emergency bills, etc., and no votes in Parliament. And if you want to see more on this, then have a look at this. This also, yesterday, it seems quite intriguing, and I suppose the word is serendipity, where all of these things came to light yesterday from, like I say, from a text message to a bit of investigation. And then this turned up, David Morgan from the silver research, a wonderful commentator, very knowledgeable man in the silver market, is the guru of the silver market, and interviewed by Danielle Cambone, who used to work for Kitco, has her own channel, but she had an interview with him yesterday in his car, just so that he could get this out yesterday. Banks to seize your money in coming financial crisis, warns David Morgan. Now, I'm not being sensationalist about this or trying to create any fear. I'm just making the point that this seems to be bubbling below the surface. And like I say, when you've got official documents from the Bank of England and wishy-washy Sunak coming out and also talking about Bitcoin, just do a search for it. You'll see where this is actually heading. So forewarned is forearmed is the purpose of this brief commentary about what's going on. But like I say, just do the search yourself. I was staggered to see how many branches were closing and why Tesco was closing and Marks and Spencer's also closing as well. The other one I mentioned a few weeks ago, I'm not going to do a search for it, but if you have a look for it, Wells Fargo Bank removed their credit line as well to their customers, and there's also others that have done this as well, so you could do a search for that as well. So there you go. That's as the market's quiet, I just thought I'd throw this in there and just see what you think, because it certainly made me think over the last 24 hours that something is going on. I mean, like I say, if you look at the videos that I recorded back in 2016, I spoke of the bail-in legislation 2011 for banks, 2013 for building societies, which also come under this purview as well. So yeah, interesting times to come over the next few months. I think we're going to see as I keep saying, it's going to be the winter from hell on many fronts. And I think this is going to be another part of it as well. So, on that dreary note, well, like I say, forewarned is forearmed. I'd rather know in advance, being the control freak that I am, and then I can take measures to actually help, hopefully mitigate what's coming down the line and be prepared for it. And also, although I shouldn't say this, but yes, I did receive a call from a very good friend who's medically high up, and he informed me he works for Cadbury's as their chief medical person, and he was mentioning that the fact that there are some food shortages coming as well. They're struggling to get ingredients for certain products, not all, but certain products, which is something that he and I have spoken about many times as well. And I do believe that that it was on one of these crummy daytime programs yesterday. A relative also phoned me about that yesterday to say you'd mentioned this a couple of years ago, that there was going to be food shortages. You'd have to be a genius to work that one out either, do you? Let's face it. So yeah, around Christmas time, according to what's this program called, This Morning or something like that. I've never actually seen daytime TV, but apparently it was mentioned on there, and she phoned me to say that how did you know this was going to happen? Well, like I say, if you don't watch the mainstream media, do your own research, you'll actually have more of a crystal ball than instead of being behind the curve when they actually announce it, and then every dickhead goes out and clears the shelves. It's as if they actually create these things, which they do. We know that. But anyway, rant over for this morning. Let's have a look at the markets for yesterday. It's good to have a rant, get it off your chest, cheaper than therapy. So, yeah, you see the markets are incredibly quiet. We did have a bit of a bounce back yesterday, and you can see this here, trading up to the 89% retracement again yesterday in the Dow. Market failing to hold here. The market waiting for this, which I forgot to mention this morning. Day one Jackson Hole Symposium with Powell. They still don't know whether he's going to appear in person or not. And that's been the topic of discussion this week within the business channels, whether he's going to appear or not. I mean, can't make this crap up, can you? More things going on in the world, and whether Powell's going to put in a personal appearance. But there you go. We've also got prelim GDP for the US as well, 6.7, 6.5. Let's see if that comes out. If it's lower, could give the Dow a bit of a wobble there. So let's go back to the Dow. So again, you can see we're just sideways. They're waiting for Powell to see if he's going to announce any form of tapering. And yesterday in the 30-minute chart, well, classic again, isn't it? We spike below the low, and then they bring the market back 150 points during the afternoon session. In the DAX, again sideways, you can see trading up to the 78% retracement there in a sideways move, but this is broken overnight with the market trading down to the 20-bar moving average. Let's see if this bounces. If it fails to bounce, then we start heading down to these numbers. But again, you can see the market sideways. It's that week before the bank holiday week, and as I say, things are likely to start kicking off, as you can see from those dates in the announcements from Tesco Bank and Marks and Spencer's and all of the other banks. It's October, November when things start to heat up, unless something kicks off beforehand, including a major correction in the stock market as well. And that's if it's a correction. And 30-minute chart, you can see, again, it was really quiet. The market, like I say, between these two lines is 50 points. It barely moved yesterday morning. Mid-morning, it sailed to the downside, went down to the low, got a bit of a bounce off there, and then just stayed sideways as the Dow went up 150, so the DAX didn't really respond, and then moved lower thereafter. And in the 2-minute chart, which I only managed to record the morning, I paused for something and then forgot to take it off, but again you can see just really quiet at the moment, stuck in a sideways range. I'd expect more of this today, as well as Powell isn't going to be speaking until this afternoon. In the afternoon session there, you can see a bit of a bounce from the Dow taking off, but again it's negligible, which again, like I say, is characteristic of this time of year. 89% retracement from there back to there, more or less a double bottom as well before the market found a bit of support, but it isn't moving. Each of these grey lines is only 12.5 points on the software, so again, ballpark, you can look and say 25-point move in the afternoon, and that was it. So yeah, it's a bit frustrating, but that's what it is. I'm sure it's going to liven up during the coming months, that's for sure. Also, the metals markets, we can see that silver stopping at the 89% retracement. Some selling in there for yesterday as well. The volume is greater than the previous bar. Couldn't break the 89. Normal trick at 230. You can see it there. silver slammed till they buy it back. Not slammed as much as they've been doing of late, which is very interesting as well. I was expecting once we started to see this that we were going to move lower. We go back to the day before and we saw that as well, and then go back to the pattern is just brilliant. If you've got the in the old days, 30 years ago, when we traded the silver futures contracts, these boys, each 1 cent move in silver is $50. So when you trade in 1,000 contracts, you're making some serious money when you're trading this same pattern. Every week you just see, look where the white is on the charts, and you'll see exactly the same thing every time without fail, that they come in and they move the market lower. Amazing. But unfortunately, the spread betting companies, the spreads are too wide to take advantage of this, and it requires something like a futures contract, which the margin I think at the moment is around $10,000, and $1 move is $5,000 per contract, so it's heavy stuff. The only other way to do this, which I've been looking at actually, is to sell the put options when the markets move lower, and then as it rallies you take the premium that way. But again, it's more of a long-term thing, or you could buy the calls. But I've had a look, but again the spreads are just too wide, which is a shame, because that pattern, as you can see, is so repeatable, and that is not a fair value market finding its own price discovery. That is blatant manipulation. Gold down yesterday, and this actually narrowed the gold-silver ratio as well, which you can see there. This coming back down to 75, having been to 78 as well, which is interesting. Gold getting a bit more of a hammering than silver yesterday. And the dollar trying to move back to the upside. It attempted it yesterday but failed, and then in the afternoon silver, of course, rallied off that spike to the downside, bringing prices back there. And I think that is it for today. Like I say, it's not about being sensationalist about this stuff. It's about being realistic about what is coming, and then being able to prepare for what is coming down the line. Okay, that's it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching, and as ever, see you in the next one.